Are you struggling to find a better strategy? Do you want to trade with ease and clarity? Hello guys, in this video you will learn the exact strategy I use to make profit from the market. Trust me, this strategy have been confirmed as an accurate strategy by professional traders, and also I have traded this strategy myself with a lot of data, and I back up a lot of data from it that yes, this strategy works. So I'm giving it to you for free. Now the strategy name is called the Alchemist strategy. So the Alchemist related to trading means the combination of different trading concepts into one master strategy. Now this strategy that is being used to form this master strategy is CRT, Malaysian SNR and SMC. These are used to find the best and most high probability trades in the market. This strategy works in Forex, crypto, indices, and I have not tested it on stock, but soon I will give you the updates. In this particular video, you will learn the concept of what is CRT, what is Malaysian SNR, advanced SMC entry model, and the last one I will reveal it in the end of this video. So please do well to watch this video to the end so you can get that very special update from me. What is CRT candle? CRT candle stands for candle range theory. The idea behind candle range theory is that the higher time frame, such as the daily or the weekly candle, provides a framework for anticipating where the next candle direction will be going. CRT candle is made up of two candle formation. Now, in a bullish signal or a bullish CRT or candle range theory, you will see a bearish candle in the first day. In the first day you see a bearish candle, while in the second day you see a bullish candle, while I'll say a bullish candle that swept the previous daily candle low and rejected and went back up to close in the same area of the previous daily candle. Now this have signaled that price will be pushing to the upside once another candle opens. The same scenario goes to the bearish candle or bearish CRT candle, where you see a bullish candle forming and another candle form again, taking this high out, taking this high out by week and come into this previous daily candle range and close inside. This means sellers has overpowered the buyers, and you will likely want to see another bearish candle. Now the psychology behind this bullish CRT candle is that sellers first of all push price down on the first day. This means they are in control of price, while on the second day they also try to push price down. In fact they did, but unfortunately buyers step into the market and push price to the upside once again. This means buyers is now in control of the market. After this candle have been formed, the next thing you will see is you will see another bullish candle pushing to the upside. Now this is our candle range high, this is our candle range low in a bearish scenario, and this is our candle range low, and this is our candle range high in a bullish scenario. Now in a bearish candle range theory, the formation is in the first day you will see a bullish candle pushing to the upside. Also in the second day price will push up once again, but rejected that high of the previous daily high and come down once again and close. This means sellers is now in control of price, or price is about to reverse. Now once another candle open, is going to be a bearish candle pushing to the downside. The second concept we are dealing with here is Malaysian SNR, usually referred to as Malaysian support and resistance. This trading approach, it is a style of technical analysis that become popular among many traders and educators in Malaysia. The core idea is to identify key levels where price will react from. There are 5 key levels we look out for in Malaysian support and resistance to mark out our key reaction levels where price will likely react from in the market. So for the A-shaped key level, this is how it looks like on the chart. You see price push to the upside and price coming down once again. So this is like a formation of a A-shaped key level where we have the top of the A level. Now you want to see price push to the upside before coming to the downside. So this is how the A-shaped key level will look like in the chart. In the V-shaped level is a reverse of the A-shaped key level where you see price pushing to the downside and push to the upside, giving us a V-shaped formation. Definitely we have the V-shaped low right here. Now you want to see price pulling to the downside and react from this level before pushing to the upside. For our open close key level, or I will say the OC key level in short, in a bearish scenario you will see two candles where the first candle will form and open immediately after the first candle being formed and push to the downside, creating a space in this level right here. You will want to see price come back to this level, medicate it, react from it and push to the downside. Also in a bullish scenario, you see a first bullish candle open to the upside and immediately closes and another candle open and push to the downside, creating a space in between the candle. Now you want to see price pushing to the downside, react from it before pushing to the upside. If you remember our A-shaped key level right here, our A-shaped key level at this area right here where I give on that first scenario, you see we have a A-shaped key level at this top, which means you have the A top key level. You know price is supposed to come back to this area and react from it, then push to the downside, right? But price will disrespect it. This is a resistance level now, but unfortunately it has become a support level where price will come back to retest from it, then continue the up move. As you can see now, a RBS or a resistance becoming support, it is a disrespected A-shaped key level and it has come back to use that level once again to push to the upside. Now looking at our SBRO level, which is our support becoming resistance, it is the opposite of this. We have the V-shaped key level right here where we expect price to come back down, react from it, then push to the upside, but unfortunately it will be disrespected and come back once again, retesting it before pushing to the downside. As you can see, a RBS level, it is a disrespected V-shaped key level. Now price will come back to the side, retesting it, now push to the downside. The third concept we are dealing with is SMC. SMC stands for smart money concept. It is a concept trading methodology that aims to follow the footprint of large market participants, often called smart money, such as the big banks and institutional traders. Now this main concept include market structure, where we see break of structure, change of character or market structure shift, liquidity, order block and inducement, and a lot more. Smart money concept give us the information of what price is doing and where it is likely to go next. Alright, so we are on GBP USD daily charts because we are going to use daily time frame for this strategy. We are going to use the daily time frame to build our bias where we can locate our CRT candle for our directional bias, and on the 2-hour time frame we will be using it as a confirmation to tell us that yes, the daily CRT candle is confirming the directional bias, and we will be using the 15 minutes to enter for the trade. Now so let's start. Now on the daily time frame, what can we see right here? You see price have been coming down for a very long time. Now you can clearly see that price have been coming down for a very long time, and it has been giving us a lower high, lower low, lower high and a lower low. But unfortunately price disrespected this support level. As you can see, this support level has now been disrespected. Now this is called s our ROBS level. As you can see, this is our ROBS level. So right now, as price have disrespected this our resistance that is now becoming our new support, we are expecting price to pull back to this area and give us a clear confirmation that price will still push to the upside. So let's just exercise patience and let me play price to see if price give us this, solid fresh CRT candle. Okay, so let's see price can come into our zone. All right, as you can see, price have come into that zone and it give us a solid CRT candle right here. So what should we be doing? First of all, we are going to mark our CRT range. So we have our CRT low right here and we have the top of this candle range right here. We have the top. So we are going to go to the 2 hour time frame to locate. Let me mark this as our ROBS so we will not get confused. So we have the ROBS. Our resistance has now become support. So price have medicated, created a CRT candle. So we have marked our candle range high, candle range low. So we have our CRT low, our CRT low, and we have our CRT high. So this CRT high is going to be our target. So let me put it as green. So this is going to be our target right there. So moving to the 2 hour time frame to confirm if this CRT is giving us a proper break or structure to the upside. So let me shift this to the left. Okay, so guys, if you are still watching to this point in this video, I will say a big congratulations to you. I'm about to reveal that trick I said I will give to you when starting this video. So the trick is this: if price have come into our point of interest or creating a CRT candle, sometimes you might not see a proper break of structure. When price give us a lower low, lower high, lower low, you want to see a proper break of structure. Sometimes you might not see it. Yes, you might not see it. What you see is you just see price pushing to the upside without giving you a proper break of structure. Now you will not be confused anymore. What you should be doing is switch on to a line chart on trading view. As you can see, we have a line chart below this candlestick. So you switch on to the line chart and you will see the break of structure. What can you see? You can see a proper change of character right here. As you can see, this is a nice change of character. Price I've revealed it on the line chart, but on candlestick it has not revealed. It only gave us a rejection from this candle. It only gave us a rejection which it has added as a confluence. Now, so the 2 hour time frame is confirming our daily CRT candle. What should we be doing? We should be going to the 15 minutes time frame and look for our entry. Now our entry is going to be a advanced SMC entry model. Now we are going to choose the nearest skill level. Before we choose the nearest skill level, we want to see an inducement before we pick any nearest skill level. So what is inducement? If you don't know, inducement is when price come into your point of interest and it give you a change of character. It's going to come back into this zone and push a little bit, but unfortunately big bands will push the price down, taking liquidity from this guy before pushing to the upside. So this is one of my entry model, the best entry model I'm using right here. So on the 15 minutes, what can we see? You can clearly see the inducement right here, where you see price push to the upside, came down once again and push to the upside, giving us a fake break of structure right here. As you can see, this is a break of structure. Now a lot of sellers, a lot of buyers, they want to say, want to buy around this area. They want to buy around all this area. As you can see, this is a value dollar block. They want to buy around this area, but this is an inducement level. So what do? Let's mark up our inducement. This is where you things get really, really interesting. You mark up your inducement and the nearest skill level that is nearing to the inducement is what you are going to pick. Because now what can we see? We can see our OC key level right here. This is an OC key level right here. Remember, we have the OC key level nearing to our inducement. So let's put our entry there and you see price might or react from there. Now where should we put our stop loss? You can put your stop loss around this area, but just to be safe, let's put our stop loss right here. Now where should we be our targets? Where, remember, on our daily time frame we have the candle range low, the candle range high, which is this green line right here. Okay, so you have our target around that area. So let's see if price come there and tag us in, which is going to give us a 1:20 risk to reward ratio trade. So let's see if price gives us that. Okay, Wow. Okay, so let me push my two right here. As you can see, price is pushing to the upside. So let's see price tag us, take us out from this trade, eating our take profits. So let's me keep playing price. Okay, wow. Wow, as you can see, a nice 1 is to 20 is to 1 is to trade. You can see the strategy is so simple. Like, you just need to wait for the daily time frame to print a CRT candle on the daily time frame. Then you go to the 2-hour time frame to confirm your breakout or your break of structure, telling you that yes, the CRT candle is confirmed. And you come to your lower time frame, wait for inducement, and you pick any key levels nearing to the inducement. Then you just wait, set your limit there, and you wait for price to tag you in, and you target your CRT candle high or the range. So let's keep on playing. Let me use another example for this. Let me go to the daily time frame and look for another CRT candle once again. Okay, so we are done with that first trade. Now let's see if price will find its way down to this area and give us another CRT candle. So the game is just like, you have to be patient enough to wait for that CRT bias aligning with your trend. So let's see if price come back down. Okay, price did not come back to that area. Now another break of structure to the upside. Let's mark another key level. We are You just mark the key level, price might give you the CRT candle from. We have a V-shaped key level and a resistance becoming support. So let's see. Okay, price reject, but it did not close at the same area of the previous candle. So let's see. Let's wait for a proper CRT candle. Wow, okay, price did not give us that. Price rejecting from this top, we might use here as a liquidity. So let's just see. Okay, that's good. Now what is price doing? Price is bouncing from this RBS level, and it's rejected and closed at the same level of the previous daily candle. So right now we have our CRT candle right here. So we have our CRT low. At this area we have our CRT low, and we have the eye at this area right here. Or you can possibly mark this area here, but just to be safe, this will be our target. Let me make this. So we are that's going to be our target. So let's go to the 2-hour time frame and look for a proper confirmation, confirming the daily CRT candle. But right now, what can we see? We cannot see any clear breakout. Even if I switch to the line chart, you barely see a breakout. So we don't see a breakout right now. Let's keep waiting to see a proper breakout. Now the nearest breakout is going to be at this level. Right, let's see if price go there and break it. So let me keep playing price. Let's see. Okay. Okay, what can you see? You can see a breakout. Now switch to the line chart. Some of you like, oh, this is not a breakout, this is just a rejection, price rejecting this candle right here. But if you switch to the line chart, you will see that price have clearly given us a clear breakout. What do you see? Price just broke past this guy right here. And that, once again, I will say congratulations to you who is still watching to this point of video, because today you have learned something from me. So we have a breakout. We should be going to the 15 minutes time frame. We look for our inducement, and the nearest POI or the nearest key level is going to be our entry. So let's see. We don't have any inducement on the 15 minutes time frame. So let's see. We don't have any change of character. So let's see if price go to that upside and break. So let's see. Once again, this is the inducement where price will come into our point of interest, give us inducement, come something like this, push again and push to the upside. So this is the same pattern we are going to use on this other setup. So let's see. So we have a key level right here. As you can see, this key level have been disrespected before, because if I switch to the line chart, you see line chart helps a lot. What do you see? You see a shape key level right there. So it is a disrespected key level. So price is reacting from there. Let's see if price give us what we want. So it's not giving us anything right now. It's not giving us anything. Price is consolidating. Why? Okay, just the market condition. I think it's going to break this low. I think it's going to break this low. So let's see. Okay, okay. So what do you see? Price are giving us a proper break of structure. I mean, a change of character, because you see we have this lower high, lower low, and price have given us a break of structure to the upside. So we now have a break of structure to the upside. What are we looking for? We are looking for our inducements, for price to give us something like this, tap and push to the upside. So let's see if price actually give us this. So let's see. Okay, let's see if price give us inducements. Okay, wow. You see, we don't see any inducement, so definitely we did not enter for that trade. So we're cleaning out this line. That is not a proper, no, that's not a high probability trade. So let's see if price give us a proper, break of structure and inducement. The concept is the same thing. It's all about mastery. All about mastery. Okay, price have collected liquidity from here because it rejected with a wick. So let's see if price went there and break it. Concept is the same. Concept is always the same. It's just about mastery. Price is not giving us any clear confirmation on our entry time frame. Okay, see, price have take this guy as liquidity. So what do you see? You see a huge CRT candle right here, as you can see. Wow, you see a huge CRT candle at this level right here. Now where is price reacting from? Price is reacting from this nice extreme zone, extreme order block right here, as you can see, the nice order block. So and it has pushed up, giving us a change of character. So let's see if we have our inducement and we take our entry from the nearest key level. Let's see if we have a proper inducement. Let's see. Wow, there's no inducement. Why? Let's see. Let's keep on waiting. Okay, wow, once again we don't have inducement and we got saved by this. So let's see, because no inducement, price keep on giving us a stopping out those irrational traders. So let's see. Okay, so as you can see, price have given us a proper break of structure to the upside once again. So let's see if price give us inducement by breaking this high right here. You can see, you can clearly see the inducement. Even you can see the inducement. Price came down a little bit and push up and it's coming to this downside. But let's see if price give us extra inducement once again. Okay, as you can see, what is this? Price has given us an inducement once again. As you can see, after this break of structure, see price came down and pushed up to the upside. So where is our nearest key level, guys? Where is our nearest key level? As you can see, we have the v-shaped key level around this area right here. So if I switch to the line chart, you can clearly see the v-shaped key level. Get, so you can clearly see the level, right? Or you see have our a-shaped key level that got disrespected. This is our a-shaped key level. So for me, which entry or which level should I be using? I will be using the nearest key level, which is this our a-shaped key level. So my stop loss is going to be below this v-shaped key level because it is still a key level, and I'll push my stop loss just to be safe. Okay, below this low, and we should be targeting a, where is our candle range high? Should be targeting our candle range high. Wow, let me go to the day time frame and pick our candle range high. Okay, price have actually passed our candle range high, so we now have a new high right here. So there's going to be our target. That's going to be our target, and let's push price to the upside and see if it actually deliver for us. A 1 is to 11 raised to reward ratio. Okay, 1 is to almost 1 is to 12. So let's see if price give us a nice clean take profits. Okay, inducement extra confirmed. Wow, wow. Okay, price stop us out. Okay, so let's see if we got another entry once again. Let's see. Now that key level did not hold. The key level did not hold. So let's see if we see another entry once again. Okay, so what do you see? After price push to the upside, let me remove these two once again. So as you can see, price stop us out with a wick right here, and it gave us a break of structure to the upside. Now what do you see? It pulled down once again and pulled up again because price did not tap into any key level. Once again, we have this resistance that is now becoming our support, and we have a v-shaped key level around this area right here. Price has found its way down to the area, and it gives us a big bullish candle. So let me enter on this one, and my stop loss is going to be wide. Wow. So I'm going to re-enter on this trade and see if price, give us another nice 1 to 6 raised to reward ratio trade. So let's see. Okay, so let's see if price give us that. Wow. Okay, a nice one. And just a little, wow. You see, you can see. So it's a nice one. Price actually stop us out with a wick around this area right here. Stop us out with a wick. Wow. So it is what it is just the same concept. The same concept I use around this area right here, where price give us a change of character inducement, then it came down to the nearest key level and push up to the other side, but it actually stop us out with a wick. If price did not stop us out with a wick, this setup is going to push to the upside. Sometimes the market can be unique. The market is unique, but you don't put blame on the market. So it is what it is. If this video is helpful, please do well to like, subscribe, and comment.